I am building a list of stocks to short sell, and I was gonna briefly share the process with you guys. Now, today was a day where the S&P 500 lost 1.5%, and the Nasdaq lost about 2.5%. I think it was the worst week for the stock market in about a year and a half, and I can imagine a lot of traders and investors losing a lot of money. Well, it has been the best day in my life, financially speaking. So, and how so? Because I had a whole bunch of shorts. So here, this is a stock screener. Now, before I even say anything, do not buy or short sell a stock because I'm saying to do so, nor anyone on the internet. So you'll have to do your study, you'll have to do your research, and your due diligence. Now, here you can filter all the stocks traded daily. Usually I use it to come up with companies to sell short, but of course you can use it to buy. Now in this case you have a descriptive tab where you can select the market cap, the dividend, the volume, the flow shorted, and all of that, the country, the fundamental, of course the P ratio, debt to equity, income, or rather ratio, the sales over the past 5 years, the EPS, the margin, pretty much everything that you can imagine, the net profit, it's on here. And then the technical, the 50-day moving average, 200-day moving average, all-time high, all-time low, a 52-week high, the 52-week low. You know where I'm saying, the pattern, whether it's a wedge, a triangle. Really, I believe this is the most complete stock screener. I use it to come up with companies to sell short. As an example, come up with companies that are struggling. Here, usually, let's say that this company has had a negative sales growth. That would be definitely an indicator. You can put negative here. The debt to equity ratio, if it's over 0.5 or over 1, that's already a problem for that company. If they're losing money, it's a problem. If the return on investment is negative, the sales quarter over quarter, they're negative. So you here are gonna come up with a whole bunch of companies. Now, again, you'll have to do your homework. You can sort it by price, the daily change, and the country, the industry, and here you're gonna come up with a whole bunch of properties, or rather companies. The other thing that is very intuitive doing is Google the most shorted stocks now, and here too you're gonna come up with a whole bunch of companies. I would stay away from these companies because they're heavily shorted. Okay, anything over 25% of the flow shorted, I believe you're gonna get yourself in a bad spot, because there is not much inventory of those shares, and they are what's called hard to borrow stock. What that means is that your broker is going to charge you a lot of interest to short sell those stocks. Possibly the game is not going to be worth the candle. But those are companies like the Children's Place, Beyond Meat. I know that Beyond Meat, my broker charges a lot of interest, so I would stay away from those. Colts, it's another one. Colts have 36% of the flow shorted, and so on. This is Spirit Airline. Some of those companies are just hated, and that too. The stock market is all about perception. The stock price is not that related with the fundamentals. A lot of people get this wrong, and that's why they look for companies that they have the perfect fundamentals, but yet again the stock price keeps going down and down and down. Also, I would stay away from companies that they are trading at a price below $10 because those companies, they have a lot of volatility. Definitely stay away from the penny stocks. Anything like that has got a meme stock, the Reddit stocks, all of those, I would just stay away because there is a lot of trading activity, and you might lose a lot of money, like it happened to the short sellers in GameStop and AMC. I would focus on those companies that are unpopular. So once you do your homework on the stock screen and you come up with struggling companies, then you're gonna have to study the fundamentals a little bit more in detail. Also, if a company is paying a dividend, usually I regard those companies like ticking bombs. And what I mean is, if the payout ratio is over 50, 60, 70%, there are companies with payout ratio over 100%. In that case, that company needs to go to a bank and borrow money to meet its obligations. I think that's distress territory. How much debt they got, that could hurt them, and it comes into play too. Whether or not they are diluting shareholders with issuing more shares, that can be another problem. So like you see, you're gonna have to come up with your own criteria and come up with a list of companies to short sell. Here there are thousands and thousands of companies, possibly 10,000, more or less. Don't quote me on this. But what I'm saying is that it is easier to come up with a bad company out of the 10,000 that come up with the needle in the haystack, come up with the next Nvidia, the next Tesla, and so on. It just the odds are against you. If you buy individual stocks, even if they're good companies, like it happened today to Google lost 8% today. So like I see here, buying individual stocks and keeping your fingers crossed, hoping they'll go up, is recipe for disaster. All my long positions, at least 95% of the money that I have in long positions, they are ETFs. Okay, because the ETF guarantees you that at any given minute you have the best performing and the highest stock price that's available. Like if you buy a broad market ETF, well, that is already as good as it gets. Okay, and that's why more than 90% of actively managed funds, they underperform the S&P 500. So again, my strategy is that the bulk of your long positions must be ETFs. Individual stocks, you short them properly. Bad companies, you're gonna use the stock screener to come up with bad companies. Now, right quick, I did this. I came up with a few companies. I don't really wanna share with you because again, there is a problem here recording the screen. When I broadcast that type of data, but basically you might want to study the fundamentals. You might want to see the income statement, the revenue over the past 5-10 years, the operating expenses, the net income, and see over the past 5-10 years the trend. Like if a company is been losing $500 million every year and it's got $50 in the bank, or rather 50 million in the bank, that's a ticking bomb. You know, it's not rocket science, and there are thousands of companies like that. Here I usually come up with companies. I study the fundamentals, like this is one of them. Basically, as you can see, the revenue, those are revenue, and as you see, this company was making 12 billion and now it's making 6 billion, and they are losing money. The net income, they lost nearly 300 million. So pretty much this company is about done, in my opinion. The other thing that you can do is the share outstanding, and they're pretty much diluting the shareholders, of course. The cash on hand, This company only has 5 million in the bank, 5 million, and they have a debt of 3 billion, and they lost 300 million last year. So I think I got my point across. This company is really a ticking bomb in my opinion. Now, do not short it because I'm saying to do that. I'm not even saying that. Like I say, I stay away from companies that trade below $10 because there is a lot of trading activity, a lot of volatility. Then you can come here. This is market B. You can see the ownership, who owns the institutions, private, all of that. You can see the insider trades and see what the owners, the major stakeholders are doing. Here everyone sold basically. So for me, this is a candidate to short sell. Now, am I gonna short sell it? I don't know. I don't think so, for the reason that I was saying. Also, if a company has been going down over the past year and a half to 2 years, you are late to the party. You are late. And once you get in at that point, you might lose a lot of money. Because if you find yourself squeezed, if anything like a short squeeze happens, you're really gonna regret the short selling that company. But like I say, it is much easier, and my life has transformed. You know, I cannot even put it into words. Ever since I've been short selling stocks, it's just a numbers game. It's much easier. It's like shooting fish in a barrel when you have thousands and thousands of companies that are lousy financials. It is much easier to find those companies than to find a good company that is not trading at a high multiple. I really can't bring myself to buy any individual stock for appreciation right now because I still believe everything is overvalued. So I'm staying away. Today I have bought a little bit of the XLK. I thought it was a good opportunity to buy a little bit of the large cap S&P 500. So again, those are things that you buy once and you might even forget about it because they do all the work for you. They replace the companies, the best performing companies they put it at top, and the least performing company or the less performing companies they remove it from the ETF. So really picking individual stocks is a loser game. What you can do is doing this, you'll have to invest some time. Of course, you might want to go off of the fundamentals, but the fundamentals are not enough. Fundamentals are important. You'll have to know the technicals. You'll have to understand the company, the management, what the insider trading does, and all that. And you're gonna follow the news. Of course, you might want to start with a small position, and then you can add to your shorts over time. So if you decided that a company is gonna go out of business, as the stock price is gonna go to zero, don't let the daily fluctuations get to you. That company can bounce down, up 10-20%. Don't let that get to you. If there was to be a spike, I would short a little bit more, and then you're gonna have a whole bunch of short positions. You can sell them, or you can sell a few of them, or you can buy to cover a few of those again. But once you have a lot of position in that company, a lot of short positions, then you're gonna see pretty much your trading account is gonna skyrocket in value. And if you need to take a profit, you can take it from the middle. Okay, so it gives a little bit of caution if the stock price was to bump up. But again, don't let those daily fluctuation, weekly fluctuation get to you. If a company has very lousy fundamentals, again, like in the example, this company is value, I don't know how much, but it only has $5 million in the bank with $3 billion in debt. They lost $300 million last year. So, the operating expenses are only going to go up. It's a no-brainer to me that this company is not going to be around long. Again, anything can happen. The other reason why I don't short the company in the example is because it's a commodity company. It's a oil and energy company, and usually those companies they fluctuate a lot with the price of the underlying commodity. So anything which is gold, oil, anything like that, coal, wheat, sugar, all of those companies, agriculture, is that their price fluctuates a lot with the price of the underlying commodity. So I would stay away from those. The other thing that I would stay away are foreign companies, because then you're going to introduce the variables of the currency. Like if you buy Brazilian companies, or you short sell them, you introduce the variables of the currency. There could be a fluctuation during the weekend, and now the stock price is gonna react quickly, and you might find yourself in a problem just because of the currency. The other thing too with commodities is that there is an unstable situation now with everything that's going on in the Middle East, Ukraine, Russia, Lebanon. You know where I'm going with this. So if there was to be anything over the weekend, the oil price can skyrocket or can drop. Again, I would stay away from those. And the good thing is that there are so many companies, thousands and thousands and thousands, that you don't have to worry about those. Now, if you are more advanced and you have interactive brokers, and I don't know, you might be traveling, you might have bank accounts in other countries, of course you can do that. You wanna short sell companies in Japan, in South Korea, in China. There are, like I say, there are 55,000 stocks being traded daily. To me, anyone is trying to come up with those 3, 5, 10 stocks to own in 2024 next year, and hoping that they go up. But really, to accomplish that, there is the ETF. Okay, you're not a stock picker. This game, I remember once Ray Dalio was saying that this game is tougher than winning the Olympics. Okay, and if you look at the 13F of his company, pretty much he's got the S&P 500, the top positions. They are ETFs, emerging countries ETF, and so on. So I think I'm gonna end up with closing this video right here. Feel free to reach out if you want more detail, or if you want to have a private call with me. It would really be beneficial to you. I really believe that this could be one of the best video or more useful videos you watch on YouTube. It's not for everyone. You'll have to have experience. You'll have to have a margin account to short sell. You need to be able to weather the storm. But of course, you're gonna have to allocate small positions. It depends on how big your portfolio is, but with tens of thousands of stocks, even if you allocate a small position, you're gonna make much more money than come up with one stock or three stocks that will go up, hoping that they will go up. So if you want to reach out, feel free to do so. And I'm very happy today. I've made much more money than my expectations. I'm sorry if you were long. Probably saw your checking account in red, but doing this, you're gonna make money when the stock market goes up. Well, then you have your long positions in the ETFs, so you're gonna take some profit off of there if you like. But then when it hits the fan and you have a bunch of shorts, you're gonna make a lot of money. You're gonna make money when the stock market goes up and when the stock market goes down. Well, I hope this was useful, and if you know, you know.